Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. Today's date is September 16, 2014. I'm going to focus on the dollar versus yen and, in particular, focus on the Bank of Japan's Kuroda because he speaks later on tonight at 1:30 a.m. Eastern Time, 5:30 a.m. Greenwich Mean Time. If you follow us at ForexLive.com, Adam Button wrote a nice piece on Kuroda and what he has been saying of late in the press. And in particular, he commented in his post on our website that Kuroda last spoke on Thursday and said that he sees no change in monetary policy stance at the moment. Now, he did add that he thought that the currency level moves due to various factors. He also added that it is desirable that currency reflects economic fundamentals. He doesn't see current yen weakness as a minus for the economy, and the yen level is reflective of fundamentals. Now, this is after a huge move to the upside that we've seen the dollar-yen move over the last month or so of trading. And so it sounds like a central banker who may be a little bit concerned about the economy. Now, in addition to these comments that he made to the press, he also had a meeting with the Prime Minister Abe last week. And after that meeting, he commented to the press the following: should conditions emerge where the target becomes difficult to meet, we are ready to make without hesitation adjustments to policy, additional easing, or whatever. And this seems like an awful broad comment that is not necessarily reflective on a positive economy or an economy that's going to continue with inflation moving toward 2% target that they look for, but an economy that may be on the verge of tipping over and having that economy stall. We know that GDP growth in the second quarter was minus 7.1%, largely due to the tax increase that went into effect in April. But if that economy does not rebound off of that tax increase, they're going to be in trouble, and they're going to be behind the curve as far as their target of 2% inflation and continued economic growth. So what do the charts look like? What are the levels that you as a trader can pay attention to see if the bullish bias is going to continue for this currency pair and look for a breakout? And if we take a look at the weekly chart, we've obviously we're trading at the highest levels in 6 years for the dollar versus yen. It wasn't you have to go all the way back to 2008 to the last time the market traded at the current levels. Now, if I focus here on the weekly chart and look at the most recent highs, we've been testing the upper trend line here in last week's trading and again in this week's trading. Today's high came in at the 107.35, and this trend line for the week comes in at 107.35 and a half. So the market has this nice ceiling up there that if we break through that ceiling, it should open up the door for further momentum to the upside for the dollar versus yen. That's going to be the level that you as a trader are going to need to pay attention to in trading tonight. If Kuroda comes out any more dovish, speaks any more in terms of potentially easing credit conditions, we could see the price move quickly through that resistance level. And what you want to see is momentum and a continuation to the upside for that currency pair. Where can we possibly go if the Bank of Japan is going to start to think about easing conditions? The first real test to the upside doesn't come until around the 110.67. I have to think that the 110 level would be obviously a level of resistance on the first test as well. Now, it's not going to happen overnight. It's not going to, it might not happen for another, week, another 2 weeks if the market is able to get above this 107.35 level. But that would be the real next target here for this currency pair. There's not much else in the way of resistance for this pair once we get above the ceiling at 107.35. Now, Of course, every position has a risk. And what is the risk that you as a trader must pay attention to in case he doesn't come out with something more bullish for this currency pair? And if we take a look at the hourly chart, look at the 100-hour moving average. We fell below the 100-hour moving average about 4 hours here on September 5th. The last time prior to that, we hadn't been below the 100-hour moving average going back to August 29th. So the trend has been moving to the upside. Any move in price below the 100-hour moving average would be short-term bearish for the dollar versus yen. I would think that any move down there would next target the 106.61 to 65 level, corresponding with these lows, and then below that, the 38.2% at 106.34. At the 34 level, I would expect to see buyers against that level. I would not expect to see the price move materially below that 38.2% retracement level. So keep that level in mind at the 106.34. It may be a buying opportunity if the market moves down that way. So there you have it, a look at the fundamentals and also the technicals that are in play in the new trading day. My name is Greg Michalowski. If you like this video and want to see more of them, please click on the subscribe button on our YouTube channel right here. Also, for 24 hours a day, 5.5 days a week coverage of the foreign exchange market, visit us daily at forexlive.com. Good fortune with your trading, everybody. Bye-bye now.